This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. Whoa, sorry about that. What is up, everybody? Welcome back to another episode of Benzinga Live. Happy Thursday. First week of trading in this new year. A shortened week, too, because Monday was closed in observance of the new year. And the market is not having a great day. Market's not having a great day, and it's more of the, bad news is good news is bad news. We had higher or better than expected job numbers this morning, which of course sent the market down because it signals that the Fed can continue hiking rates. I was looking at our go-to CME watch tool this morning, and I'll pop that up right here, right now. And you can see by this, by the tool, which uses bond markets and all these ways to price in the probability of our next rate hike, 58%. So you can see our current rate is 425 to 450, 58%. So about 6 in 10 odds that we are going to get a 25 basis point hike. 41% we're getting a 50. So it's still saying more likely that we're going to go down to 25. But if you look, just one day ago on January 4th, yesterday, which was Wednesday, those odds were about 70%. So the bond market saying, okay, hold on, we might get another 50 basis point hike next time around. We've heard Jerome Powell still maintain a pretty hawkish stance regardless of the fact that inflation has moderated at least somewhat. And, when you got that going, it's like, if that's Powell's mindset and he's really going to stick to his guns, then they would be, then Powell would go another 50 hike if he's serious about that. But we'll see. I don't know if... Alrighty. Quick rundown on the show today. As always, if you guys got stocks or trades you would like to check, like me to check out on our Benzinga Pro platform, drop them in the chat. Quick rundown of the show today. We will have my man Steve Kalayjian join us here in a few minutes. After Steve at about 12:15, we'll get Robert Roy. We'll be running through some charts with them. Let's go check in on the overall indices. Let's take a look here at the 5-minute chart just so we can see. Let's go 2-minute chart actually. So VU, SPY, you bounced off the bottom, kind of double bottom here, but it's still looking like to me we're making lower highs. So until we take out some of these previous highs on the daily, we're looking at the 2-minute candles here. Here, let's go to SPY. We don't need to be looking at VU right now. So, on SPY here at 3, I want to see SPY take out 380.30 and then 380.75 before I can start getting bullish on the day. But you do see that, we did kind of bounce. We broke through those lows and then bounced off of them here and now kind of selling off again. So we'll see. We'll see what Mr. Kalayjian thinks about today's markets and these crazy markets so far to start the year. We've been basically just seesawing up and down. Some other top headlines of the day. Let's go head over to benzinga.com. Former Celsius CEO faces lawsuit by New York Attorney General for alleged investor fraud scheme. We can take a look at Celsius's stock. The stock is down. Oh, wait. That might be the crypto Celsius, not the energy drink. I guess it would help if we read the article, huh? Yeah, Celsius Network. So, more crypto fallout there. Over 400 million Robinhood stock linked to Sam Bankman-Fried Dell. So, more scrutiny regarding Robinhood stock and how much that Sam Bankman-Fried owns if he'll have to sell. Robinhood now trading at $8. We've talked about that with Luke as a potential buyout target for someone like Goldman or something. I don't know how, convicted I am of that. Yeah, let's see. Jim Cruz, what's up? What are you trading today? Let's go back to our Benzinga Pro platform. go to the news feed, see what we've got going on today. One thing I've been watching is the XLE, the energy sector. You can see XLE actually having a decent day. And I don't know if that's because of the quote-unquote good econ data that we got this morning, but it is interesting. The more you see, to me, the more I see XLE going up, the more I see people willing to buy energy in this macro environment is telling me that some people out there at least are not expecting a huge global, slowdown in economic activity. Otherwise, you wouldn't be buying XLE up here. So it is surprising to me to see energy trading higher on a day where the rest of the market's getting crushed. Again, XLF, financials going lower. So that's interesting because the whole reason the market's down today is because interest rates are expected to now, stay higher for longer because the economy is so strong still. But with the XLF ticking lower today, I would have expected banks to hold up a little bit better, considering that higher interest rates allow banks to make more money. But of course, if the interest rates, increase is associated with a recession, then that's not great for banks. Recessions, not great for banks. A little bit higher interest rates, good for banks. Baba. I mean, Baba's just super strong right now. We can look at it on the 5-minute chart. Opened lower today, actually, by more than 1%. Now broke, it broke yesterday's highs. And you can just see this thing's been a monster for the past, 3 months. Let's go to a daily chart here. Zooming in. This low from November, $60 up to $105. $45 from 60 to 105. I think we did the percent change calculator on that yesterday, and it was like 60 or 70%. So Baba's been a monster, and I know, I mentioned this yesterday, and I still think it's true. And I could see Baba kind of trading down here in this range for a while, from about 85 to 125. I could see that just kind of barcoding in that range for a while. But to think long term, you missed your chance on Baba. I mean, zooming out on this chart, you can see even going back to 2017, where my cursor is in 2017 right now, you're trading at $185 a share. So you got to go back more than 5 years to even find a spot that we were as low as we were here. Go back to 2016 to find that low. So I think long-term, Baba's valuation will continue to increase. I'm not rushing out to buy shares right now at 105, just because, like I said, if the stock's already up 60% or 70%, USD swap rate high today. Yeah, that's a good reason why banks could be a little bit down today, Shelly. Excuse me. So if I'm looking at SPY right now in terms of just a day trade or intraday, not long term or on the daily chart, just here on the 2 minutes, as we're kind of coming back down here, I really would just be watching these levels right here, 379 basically, and then 370, 870. And if we blow through both those levels on the downside, the markets are zigzagging to take out huge option premiums. Yeah, I mean, honestly, that could be part of it too. I think options activity in terms of just retail investors, like buying calls and buying puts, has slowed down quite a bit. At least definitely from its highs like a year or more ago. Oh, SPY's kind of pushing higher now. There we go. There we go, Mr. SPY. SPY kids, unite. Look at the options on the QQQ the past couple weeks. Today's max point. Yeah, I could definitely see that, Kevin, just kind of market chopping around, not really getting to people's strike prices on the upside or the downside, just letting people kind of, lose a lot of those option premiums. But let's oh, I see Jim Cruz. Jim Cruz is also asking about Roblox stock. Roblox, honestly, from a chart perspective, like Roblox obviously got up to 140 when growth was going crazy, and ARK was at its highs November 2021. Remember those Scholastic book fairs? Yeah, Shelly, I remember those Scholastic book fairs. You guys had those? I actually don't mind the way Roblox's chart looks right here on the daily chart. I don't think like growth is necessarily like where you would want to throw a lot of money right now, but in terms of just a trade, You could kind of look at this as a potential double bottom. You have a clear, out if you want to set a stop loss right here at like $25. If you zoom in, I'll show you why I'm picking that just right here on the recent bottom. So that if we do come down there and don't bounce off those levels and blow through it, you're out at $25. It's about a $30 stock right now. So what, $5 from 30 is about 1/6 of it. So it would be about, 18% or so of a loss if you set a stop loss at $25 from here, which isn't, what you want, but it's not the worst thing in the world. All right, guys, I see our first guest hanging out backstage, Mr. Steve Kalayjian. So let's go ahead and whenever Steve is ready, we'll go ahead and give him our very special Zinger Nation welcome. See what stocks he's been watching. See what he thinks about this market in the new year, 2023. Is it going to be a new year for the market, or is it going to be same thing we saw last year? Let's see what my man, Mr. Steve, thinks when we come back. Mr. Kalajyian, how you doing today?
Hey, Aaron, how you doing? Happy New Year.
Happy New Year to you as well. Hopefully you had a good time celebrating the holidays with your family.
It was very quiet. I got pink eye over the holidays, believe it or not.
Oh, man. Well, hopefully you're making a good recovery.
I'm much better. And of course, I had an allergic reaction to the medicine and different story. But I'm back. Don't worry about it. I'm back.
Great.
How are you?
I'm good. Well, I wish the markets were a little bit better today, but we're seeing some kind of turnover in the SPY off that econ data this morning. What are you thinking about this? Have we seen the lows for the day? Are we going back to the lows?
Well, coming in, with yesterday's volatility in the market, all four of my indicators on my ETFs, I had sell signals. We had some really great shorts right after the opening. And we just traded, pushed all the way down on the S&Ps onto the 23.5 level. We're trading between 23.5 and 33.5, 35 right now, 40 range. So I think the lows are short term in for the day here. There may be an outside chance to get one more push down later on this afternoon, or if I work off these oversold conditions off the 15th for another push down. But again, listen, I think the market's in a lot of trouble. Kashari comes out yesterday and says they're looking for 5.5% on the Fed funds. Market's not even factoring that in. I don't think they're going to cut interest rates this year at all. I do think they're going to start, again, it's going to play out right into the work that I have into the October, November time period where we're going to base and do something we haven't done since 2008. I do think the market goes to a significant lot lower from here. It's not going to break the March 20th lows of the COVID lows, but I could see 24 and a half, 26,000, making a higher low from that point. And then I think once the Federal Reserve makes that first initial cut, that will be the start of the new bull market. And I do project a 2-year bull market that will push the S&Ps over 5,000. But we have a long way to go before that happens.
Got it. So how are you trading this in the meantime, Steve? I mean, what have been your strategies? What is your strategy going forward?
Well, as you know, my live channel each and every day, we're just consistent every day, just hitting singles and doubles, just trying to be, we're just looking at, quarter, half, 1%, 2% a day on people's accounts, just intraday trading the markets, not going home with any overnight positions. Those who do go home with overnight positions are, obviously playing like the SDAOs, the SQQQs, the TZAs, or the big inverses, or the ETFs, if there's any type of swing trade that I see on the horizon. I don't see any swing trading right now. I mean, the first couple, we've been stuck in a range since we pushed down from the 39.18 down to the 37.78 before the end of the year. We've been between 38.10 and 3900, over 3900 almost yesterday, 3901 yesterday, or the day before. So we're just in a range here. We're backing and filling where there's no guidance, no direction. I have nothing on the bigger time frames. I'm just going to wait and see if we get any aberrations up and or down. But we're just, we're playing it close to the vest right now. Yesterday we had some really great shorts and Apple and all the big cap stocks. Today, Apple and Netflix seem like they're, pretty much sold out for the time being. Um, Roku comes out with great earnings. I mean, great news about 70 million new customers. You sell the stock short on the opening above 43. You blink, it's down $1.50, $2. So this is the type of market that we're in, and you just got to trade what you see right now and just trade them.
Yeah, 100%. I think that's, like you said, trade what you see. And if you're stuck in anything, long term right now, that's why I like what you said. You guys aren't really holding positions overnight right now. It doesn't seem like that type of market to be doing so. And if you're looking at this week's price action, I mean, just SPY on the daily, you can see this, right? Red day, green day, red day, green day, red day, green day. The whole time we've kind of just been in this range.
Went nowhere.
Yeah. So I don't know. I mean, I'm sure there are a lot of people out there that look at this chart and are either bullish or bearish, and they're buying out of the money calls or out of the money puts. But as long as we stay in this range, you're not making any money doing that.
This is actually pretty bearish, though. Being in this consolidation, it's like almost like a bear flag is setting up here, and then really for a big caboose to the downside. I think the Federal Reserve, I don't know why anybody listens to them. They've been wrong about everything, and you know how negative I've been on them. When the S&Ps were trading 48.08, we had Fed funds at 0 to 0.25%. I'm like scratching my head. I'm like, and inflation, CPI, and the numbers were staggering. I mean, just if you're a common person, you go to the grocery store, you saw prices rise. I heard a report yesterday that the average household, about a month and a half ago, I heard it was like $4,000 or $5,000. Now I'm hearing it's $10,000 for a family of four of increased inflation for the year on food, energy, and heating oil, and everything that is accumulated to the average person living. $10,000. That's like making $18,000 more. I don't know anybody that I know in the private sector or who has a full-time job in corporate America, or even someone who's an entrepreneur adding $18,000 to their overall salaries. Aaron, there's significant economic uncertainty here. I don't think the policies in place are with the Federal Reserve. I think they're stuck. I think that they have stagflation on their hands here, and which is the worst combination that they can ever think of.
Yeah, I mean, the stagflation, that's what, really the Federal Reserve wants to try to avoid.
Oh, they're screwed. They're screwed. That happens. I think we're in it. So, I mean, they just don't want to admit to it.
Right. All right. So, Steve, what about any individual names right now? I know you're like typically watching the same names, but what about right now? Anything sticking out to you?
We just trade them. There's nothing here that I would say back up the truck. I think Tesla can break 100 in the next month. The low could be anywhere between the 80-90 range, 88.5 range. I've been calling shorts and then we kept on lowering targets on Tesla, and every target's been met, right? So in the last 4 months, I've been calling for lower highs on the indexes, and look at that chart, lower highs. This is not going to end well here. Not with the statement that rates are persistent and inflation is persistent. They're not going to cut rates this year. I don't see it. Rates are going higher. And they're going to stay there. Federal Reserve is quoted, not me, quoted, saying that they want to bring the inflation target to 2%. Again, I told you on the last show prior to the holidays, I said, where were they when rates were, or the index was 3, 4, 5? They did nothing. They started at 9%. That's when they got aggressive, right? So 50, 75, 75, 75, 50. They don't know what they're doing. Interest rates are being juggled by the natural bond market, and that's the real true market, if you ask me.
Yeah, I mean, and I think right now, a lot of people are trying to watch the bond markets for clues, trying to say like, okay, the bond market doesn't think the rates are going to stay up for this high, this long. Are you watching bond markets, the dollar?
Yeah.
What? Yeah.
Oh my
What do
God,
you?
the 30-year bonds are right in front of me. So we hit a low of around the 117.5, and then we rallied sharply to 132. So the bond market is telling you two things. One, they don't believe the Federal Reserve. Okay, and that two, we're going to go into a significant recession. Okay, because bond market is betting lower rates, very not any near time soon, because if the bond market did not think that, bond prices yields would be going like through the roof right now, and the yields are off the highs. And so we rallied sharply from 117 to 132 on the 30-year bonds. So the bond market is pretty much telling you right then and there, even though we pulled in from 132 down to 126, now 127. The 30-year, the bond market is telling you that I think that 117 low is it, and that the Federal Reserve is pretty much screwed, and that they're telling you they don't believe the Federal Reserve, that they're going to probably have to, even if they raise another half to 3/4 of a point to bring it over 5%, the bond market will not make a new low. I think the bonds are then signaling to you that we have significant problems on our hand, and that rates are going to eventually have to get cut sharply. But here's the problem. The problem is the Federal Reserve can sit on the hands for a long period of time. And what happens if what happens if inflation doesn't get to their 2%? Let's say it gets down to 6.5%, 5.5%, 5 to 6%, still above their target, still unacceptable for most Americans.
Yeah, I mean it's tough right now, I think, because a lot of people who maybe haven't been doing this for a while, like you have, Steve, see the fact that the US economy, not the market, has been able to kind of withstand a lot of these rate hikes. I mean, you see obviously news, Amazon's laying people off, and Tesla and and a lot of these like big tech names, but overall it's not like we've seen a huge uptick in unemployment, and yet the market's getting absolutely clobbered. I mean, do you expect, like, one of two things got to happen, right? Either that big tick in unemployment's coming and that recession's coming, or the market will turn around, right? It's got to be one or the other.
Powell's, not this statement, the statement before, admitted that, he was saying that unemployment, people are going to lose their jobs.
Right.
I mean, Amazon laid off 18,000 people. Anybody should lose their jobs, in my personal opinion. And I know you want to shoot me for saying this, but they should lose their jobs. They don't even know what they're doing, And so you want to kill the average American. 18,000 people are going to lose their jobs at Amazon, right? We had a healthy economy going in. They could have maintained this inflation. They could have nipped it at the bud. They could have tried to combat it. Initially, when they saw a CPI number above past their 2% target, they just sat on their hands. And I know exactly the mindset they had. Their thinking was this: asset prices are exploding, and that should help cushion the inflation. But the problem is, not everybody's in the stock market. The average person doesn't have enough money to offset the inflation risks that were in the economy at the time. It was a pathetic mindset. That was just my opinion. So when you see the S&P is trading at 48.08 and Fed funds rate at 0 to 0.25%, you're scratching your head. I told all my family and friends, whatever money you have in the market, hit every bid. I said, this is insane. They're going to caboose them. They dropped, 1,300 points down to 35.02 in the contract for the low of last year, from 48.08 to 35.02. They rallied a little bit here or there, but this is going to get ugly here. And if people think that the lows are in, I would not buy them here. They could rally 100 handles, which is nothing, 1,000 points here or there. But ultimately, I think this is not going to pan out until sometime the third or fourth quarter.
Yeah, I mean, it could be, like you said, just a very rough first couple, quarters of the year, and we don't know when the Fed is going to end up switching and cutting those rates. Let's go switch back over to the S&P 500 here. You can see on the 2-minute chart, we are now coming back down, approaching these lows of the day. So if you're day trading SPY, Steve, like I'm watching these bottom levels we've already hit twice now, back at 379, basically flat, and then 379.80. What do you think? If we do bounce off those levels again, can we start maybe potentially trying to go long SPY on the afternoon?
You talking for a trade for the day, or you talking like for like intermediate?
Just for the day, in and out.
I think if they persist, if they could make a new low, get down to the 05 level on the S&P, 03, 05, 06 level, 07, you'll probably get some buy divergences. I'm already seeing sell divergences on the SQQQs, TZAs, and SDSs. So those sell divergences will be the inverse to the overall market, like the spiders, the Qs, the diamonds, and the Russell, to buy divergences. So we have to wait and see. I need to see my technicals on my work. First of all, you need to make a new low, and I need to see my technicals get into single digits on my algorithms. If that happens, then we should get some type of a sharp bounce.
All right, yeah, I'm watching this here. It's been, like you said, Steve, a pretty volatile first couple days in the market.
And I'll tell you this, Aaron. I told everybody on Monday, if you thought what you saw on Monday is I told people before the start of the new year, they said, what do you expect for 2023? I said, extreme volatility. I said, right now may be the calm before the storm, but we had some volatility early this morning. We had significant volatility up and or down yesterday, and we had volatility on Tuesday. And I just think that most people don't know how to trade this. I think people are very conservative right now. I think a lot of people are sitting on the sidelines. Those people who are with me in my live channel really fully understand what I've been teaching and understanding the software I provide. But again, the average person who's not with me per se out there in the world, they're never going to see. I think 2023 is going to have extreme volatilities. And the last thing I'll end it on is, been doing this 40 years, and I've seen bull market rallies. Bear market rallies are more vicious than bull market rallies. So people can start getting short near the lows, and they'll rip them 200 handles like nothing. I've seen it, and I've lived through it. So nothing phases me after 40 years of doing this. So, but again, I just think 2023 is going to have an extreme year of significant volatility.
Yeah, and we're seeing that, like I said, so far through the first few days. Again, we're on the 2-minute chart here. You can see we're getting a slight bounce here, so we'll keep watching this on the SPY. But I'm not really interested, Steve, on trading the SPY on the long side, even on an intraday, until we start taking out some of these previous resistance levels. But yeah, man, I mean, it's just like every single day, it seems like, if you go long, if you're thinking, okay, it's finally time to start taking some risk, the market's like, nope. Or then if you're on the opposite side saying, okay, the market's being real, shady, I'm going to go ahead and short it. And then the next day it's up 5 points, and it's impossible to try to, gauge one day to the next what this market's going to do. When do you think it's time to really start seeing some more risk? Like, what will be a sign to you that more speculation is returning to the market, more big name institutions maybe are willing to take some more risk on?
So that's a great question. The only time I would say for that to happen when we do our swing trades is when I get significant aberrations in the market. So let's just say, for example, the S&P futures, they drop 150, 200 points from here. The Dow drops 1,800 points from here or something like that. And, we open up another day, they drop 50, and now we're down about, 200 points off my, one of my algorithms I have. I'll take a long off of that, and I'll start accumulating a position for a sharp bounce, just a tradable bounce, something that would work off that significant oversold condition, and or the inverse if they get a 250 handle rally and the Dow rallies 1,800 points, 2,000 points, then I would wait for aberrations in the market, jump on the S-Dows, jump on, the inverses, the SQQs, the TZAs. So we're not there yet. We're not there yet for that. You know what I'm saying? We're just flatlining on the daily chart for the first 3 days of the year, and I don't see anything right now. We're just very lucky and very cautious on taking the strategies that we're just trading off of. We caught a great short in oil, it dropped 70 cents. Caught the long, ran 60. Apple today caught a couple nice longs off Apple. Netflix caught a couple longs, and then a great sell divergence. It dropped up over 3. So we look at the same names every single day, but most of the things that we're looking at, we trade, like I said, the same names each and every day. We're just we had some really great had a great short and long, and then a short in Microsoft today. So we're seeing that there is volatility in the market. Take advantage of all this. For an excuse me, for an institution to come in to buy up the market. If I was running money, I'd be on the sidelines, or I would just be intraday trading the index market.
Yeah, I think that's one of the problems we're seeing right now is that a lot of money is just still on the sidelines. And I think,
100%.
like you said, that new bull market might not start until the Fed really does cut rates. So a lot of people might just be waiting until then.
I've been doing this 40 years. The minute they make that first rate cut, buy everything.
All right. Oh, I will do that. All right, Steve. Well, it's always great to get you on the show. I'll go ahead and drop that link in the chat. TradeEasy.com for you folks out there that want to check more of Steve out. Steve, as always, thank you for hopping on the show today.
Thanks, everybody. Have a great day, Aaron, and I'll see you guys next week. Take care.
Yep, of course. Day. You too, Steve. All right, guys, that was Mr. Steve Kalayjian. TradeEasy.com. Link is in the chat. Let's go ahead and do a quick rundown of the overall indices. Qs still trading down on the day. Look at that 2-minute candle here. Got rejected after that tiny, itsy bitsy little rally we were trying to get right there. But on the daily chart, Qs hitting those lows that we were at back a few weeks ago. So anyone who thought, okay, new year, new market, we're good, we're out of the woods, might be getting chewed up a little bit today. Looking at the SPY here on the 5-minute, still, yeah, kind of rejecting off that there. Dow down a little bit. Wow, actually down 1.12%, more than I thought the Dow was down today. Let's see if XLE is still, yep, XLE is still hanging out. RB saying some great takes. Thank you. And guys, as always in the chat, if you've got stocks you want us to check out, got trades that you're in, or got trades that you're thinking about getting in and you want to take a look at them, let me know in the chat. Yep, we are ready. We've got a very special. We've got some special in-person guests joining us here at Detroit HQ. Benzinga HQ in downtown Detroit.
Do we need headphones or can we do a speaker?
We can do we don't need headphones. We're all here. We'll give the special guest intro when we come back. You'll see who we are with. I am joined by Raznick. Arya, do you mind? Here, let's get that microphone down here a little bit closer to your face.
Yeah, Arya, you gotta say.
Say hi to everyone, Arya.
Hi.
Arya, why aren't you in school right now? It's Thursday.
Because I don't have school.
You don't have school?
Yeah.
But it's Thursday.
Still
you don't have school.
Uh-huh.
Well, Arya, so last time your dad was on the show, we were talking about a game that he said you guys really like. I think it's called Rumble Guys. You guys still play that?
Stumble Guys.
Stumble Guys.
No, we still don't. We don't play that anymore.
Oh my God! So
but we need to talk about that and talk louder, Arya. We need to talk about that, Arya. Stumble Guys is made by Tencent, okay?
Correct.
When we were on the show, we had Riley Raznick on the show, and this was about 2 months ago. I bought a bunch of shares of it. I am now up on that. It's probably my best position I've ever. It's one of my best positions I've ever bought in such a short time with the return on Tencent. Check it out.
So yeah, give us your average price. It's trading at about $44. I'm looking at right now. 45.
I'm pulling it up.
$45 we'll call it. A couple months ago.
Benzinga Pro. and I got it at up 25K. I'm up 32%. That's because I kept buying more shares. I would have been up more. I mean, I bought it how many times now? Like literally a bunch. Ari has no idea what we're talking about, but yeah. So it's up 32% since the last show. So we bought this stock, Aria. It's a company. A stock is a company, Aria. We bought TCE TC. What's the symbol?
The symbol is
TCEHY. It's on the screen.
Yep.
Okay, we bought it, Aria, because you and your siblings would play Stumble Guys. But the thing that you guys did on it, you didn't just play it, you spent a lot of money on it. Can you tell us more about that?
We spent a lot of money on it because like it was so cool, like the skins, and like first time I spent something, it was like $2. My mom was like crazy about it, that she didn't want me to buy it. So I still bought it, and then I just got all the skins, and then I was happy. And then next thing I got was $10, and I got this like special golden guy, and it was like a pirate.
How much was that?
It was probably like $10.
So she kept spending $2, $10 on Stumble Guys, which is owned by Tencent. And so my logic was, I know the Chinese, the market's gotten better there, but my logic was, if Aria and her siblings are spending money on Stumble Guys where it's 100% margin, do you guys realize she was spending money on skins? So if you're a Benzinga Pro user, we should charge you $4 more to change the color of your skin on Benzinga Pro. Like, there's a lot of things like that. So she was doing that, and she kept spending, and she would beg us every day, can I get more money for Stumble Guys? Now, here's the one thing that is putting a little damper into my Stumble Guys, is that they don't play Stumble Guys much anymore. What happened, Aria?
So Josh started not to like it. And then Wiley started to not like it.
Oh my.
And then I started not to like it.
Well, so all these people watching might not know who Josh, but those are your siblings that were your older siblings that were also playing the game.
Yeah.
So Shelly in the chat's asking the good big question here is, now that you're not playing Stumble Guys, what are you guys playing? Are you playing Roblox? Are you playing anything else that you're now spending money on?
Nope.
Yes, you are. Yes, she is. Yes,
She's not. Aria's not spending any more money.
I'm spending money.
You're still spending money.
Yeah.
Tell them.
Pokemon.
Pokemon. All right. Do you know who makes Pokemon?
No.
No, you don't know. You know what? What's the Switch? You played on a Switch?
No, it's like
cards.
Cards.
It's the Pokemon characters and all that stuff. But there is Pokemon, whatever that brand is. All she wants are these Pokemon cards. But the Roblox you guys asked about, yes, my kids still do Roblox. Aria, not so much. And just because she's not playing Stumble Guys doesn't mean I'm selling my 10-cent position. Because my logic is, kids are still doing it. Maybe Aria's not right now, but Stumble Guys, when they introduce, like, my son Josh played Fortnite for a while, then he stopped. When Stumble Guys comes out with, like, Stumble Guys 2, like a new rating system, new level, I think it'll bring back a lot of people like Aria. I think Aria is not done with Stumble Guys. What are you looking at, Aria? What are you looking at?
Nothing.
You're looking over there.
No.
The Congress? You're looking at Congress? Oh, you are.
Kevin McCarthy?
Do you want to be a congresswoman?
No.
Are you sure?
Yes.
What do you want to be when you're older?
I want to be Charizard.
What?
A Pokemon.
Yeah.
Oh.
Pokemon.
You want to be a Pokemon?
Yeah.
Okay, what about after that?
I will.
Look at you on TV. Look at you. Look in front of you. Right
I
there.
will be.
Do you see yourself?
Yeah.
Okay.
I will be. I work at Apple.
You wanna work at
Apple. There you go. You'll make a lot of money doing that.
What do you want to do at Apple?
I want to get a lot of money.
And are you going to work in the store, or what are you going to do?
I'm gonna work at the store and get all the money.
And get all the money.
Yeah.
Okay. Do you know anything about money? Like, is $10 a lot of money? Is $100 a lot of money? Like, what's a lot of money?
Okay. $10 is kind of a lot of money. $100 is a lot of money, and $1,000 is a lot of money.
Okay, so thousands a lot.
Would you be able to live the rest of your life if I gave you $1,000 right now? How long would you be able to make that last?
Probably like 10 more years.
10 more years? I think
Yeah.
you could probably go a little bit longer than that with $1,000. You just got to be, you got to know what, you can't be buying too many skins on Stumble Guys.
I don't buy any skins anymore. I
Anymore.
just go on Stumble Guys and see if there's like any more free stuff to get.
Okay, so back to the stock market. I know you have another guest waiting. So Arya, Stumble Guys owned by Tencent. Roadblocks, you do a little bit. Do you like the Xbox?
No.
Okay.
Do you guys have a Switch, Arya? At
Nintendo
home?
Switch? Do we?
I don't know.
Isn't it that?
A Nintendo, yeah.
Oh, yeah.
Yeah.
we do.
Yeah. So Nintendo's who makes Pokemon,
And
or they have the licensing rights for Pokemon. So Nintendo, if you told me that all your friends love their Switch and they're not buying, PlayStations or Xboxes, I want to hear about that. Is it? Do most of your friends have Switches?
No.
No. Okay. So maybe no on Nintendo then.
No, I think it could get there. But the other thing she does a lot of, she's on YouTube a lot.
Okay.
And she's on an iPhone a lot. So she likes Apple iPhones.
And Google.
And YouTube. Okay. So I'm a big believer in owning Google forever. So I believe you buy Google, and if you don't own it, you dollar cost average into Google forever. And I have owned Google since the IPO, and I've never sold. I think Google is accepted, regulated monopoly, and she's on YouTube way too much. Watching videos about Pokemon. And by the way, Arya doesn't believe this, but before he comes on, Arya was really into Stumble Guys, right?
Right.
Now she's really into Pokemon.
Okay.
My prediction, Aaron Bree, is in 3 months, I won't hear about Pokemon. Do you know what I mean?
Okay. We needed to know about what the next thing is first. So Arya,
do you believe me? Like in 3 months, you're not going to care about Pokemon?
I'm still going to care about it.
She wants to be a Charizard when she grows up. Of course she
Yeah.
cares about it.
I'll fly around and do everything.
Do this one.
Bye, Felicia.
Do you hear that?
Yeah.
How about this one?
Very nice.
Okay. All right. Arya, we're gonna do a drum roll. Okay. Last thing, Arya. Tell us what is the thing that you think kids are gonna play with next? Like, what's gonna be the next big thing next after Pokemon?
Probably like
What about Amazon? Do you use Amazon?
yes.
Okay.
I asked
Wait, here. How about this, Arya? Or sorry, go ahead.
No, go ahead.
I asked to buy every day. I asked my mom, "Can I buy Pokemon?"
On
She says
Amazon?
no.
Okay.
Who's nicer, your mom or your dad?
My dad.
Wow. Wow. All right, so Arya,
It's on
so
video.
my last question for you is, what did you? And you can't be Pokemon related. If there's anything else, what did you ask for Christmas or Hanukkah this year?
Can't be Pokemon
Can't
related.
be Pokemon related. You gotta have something else you asked for.
You've exhausted Pokemon.
This ball that like flies around, and like it like
Shelly, that's correct. I bought her a lot of Pokemon cards.
it's
It's
like
a ball that goes in there. She brought it here today. I don't know what it is, but it's like it's a thing. It's
Is it
a
cool?
thing.
Is it fun?
Yeah.
You like it?
Mhm.
What was what was the best Christmas present anyone got this year? What did Josh get?
He got $20.
The best gift anyone got? You got a jersey, remember?
Yeah, he got
Jared Goff jersey.
and I got a Jerry Golf jersey too.
Nice.
You know who Jared Goff is? Who's Jared Goff? So tell the listening audience. Who's
He's the
Jared?
quarterback for the Lions.
Woo! And why
Well,
were
you
you
get a,
why were you excited?
Because I always wanted a Jared Golf jersey.
But do you like Jared? Are you guys friends?
Yeah?
Is your friend Jared's your friend, right?
Yeah, he loves
All right, okay, yeah. What were you gonna say?
he loves when I do the gritty.
He loves he loves you to do the gritty. We do the gritty for the audience?
Sure.
Okay,
All
Arya,
right, let's get the
thanks for coming
ceiling
on.
cam on.
We're gonna
Thank you,
camera,
Arya. Everyone
all
smash
right.
the like for Arya.
Okay, smash the like, share it.
All right, give me a high
Arya,
five.
Wait, she's gonna do the gritty. So, come on. Where we gotta go? Oh, are you okay?
Yeah.
Okay, we need a camera in front. Go over in front of the table. Okay, go there. And I don't know what music to play, but just pretend there's songs. Doo-dah, doo-dah. Go ahead.
Oh, that's good, Arya.
Now go back. Do it again. Do it this way. Go back.
Did Josh teach you how to do that? Or you teach
Yeah,
Josh
there
how
he
to do
goes.
that.
There he goes. Yeah, Jared Goff likes she does the gritty. All right, go Lions. Aria, thanks for coming on. And so someone said water that plant. And they said you did great, Aria. Someone said don't let her leave the TV station. All right, Robert Roy is like, what am I coming on to? Anyway, thank you, Aria, for coming on and sharing the young stock picks. We do this every so often around the holidays, and expect more of it.
Woo!
Thank you. Peace.
Thank you, Jason. Thank you, Aria, for joining Benzinga Live today. Special guest appearance. We love in-person guests.
And I'll be back for tomorrow for some stock picks if we're doing the show. Okay?
Woo! I don't know if we are because tomorrow's the quarterly meeting. Yeah, the plant's gone. Don't worry about the plant, guys. The plant will be fine. It's supposed to look like that. Wait, where did the plant go? Oh, the plant was only on the other shot. Plant will be fine. The plant will be fine. I promise. Well, it'll be fine.
AB, turn off the Jeopardy music.
Why is the plant not being watered? Someone wants to know. That's pretty funny, Shelly. Guest of the year, Sydney says, and that's a very early nomination. Guest of the year so far. Sydney Osborne from, I think she's joining us from Sydney, Australia. Sydney Osborne says, guest of the year. Aria, congratulations. You are the earliest nomination for guest of 2023. All right, guys, without further ado, we've kept Rob waiting too long. Let's go ahead and give Rob our very special intro music. And when we come back, we'll be talking some options, some trades, some charts, some spreads with my man, Rob Roy. Mr. Roy, how you doing today?
Hey, Aaron, how are you? Happy New Year.
Happy New Year to you as well. Hope you enjoyed some, time off with your family and the holidays and everything. How are you doing?
I did. Yeah, it was great for you as well. Hopefully you got to spend some time. I know you were away. You were with family, right, when we spoke last?
Yeah, I was back home in Missouri, back home in St. Louis. I did the show a few times from home, but it's I like being in the studio. I like being in here doing the show, so it's definitely better. I don't have as nice of a at-home setup as you do.
Well, it works. I mean, I spent a good part of my life here, so between trading and working, it's the place to be. So we're supposed to be in the office today, but we were selling a car, and the guy was coming a day earlier from Rhode Island to pick it up. He called me an hour ago and said, "Hey, can I get it today?"
Wow. So what's well, I mean, since you're selling a car right now, I mean, a lot of people have been talking about the used car and used and new car markets. How's that process going for you?
Yeah, it was easy. I mean, my daughter, it was a car she drove. It was just in my name. So she found these online guys. She took a couple of pictures, answered a few questions. They walk up with a check, hand it to me with a tow truck outside, and they take it away. So it was a fairly painless process. But we sold it because she bought a new car. This one was in the shop for 7 months waiting for parts.
Holy cow.
7 months. We got
what kind of car is it?
2013 Focus. It was her first
Oh, wow.
car. Wow. She bought a new Mazda this year, last year, 2022. And we got quotes for it when she was buying her new car, and they were offering $5,000 for the car then, and we got nowhere near that today. So the used car market has definitely come down.
Wow. All right, Rob, I was just curious because, I mean, I might be in the car market or looking for a car at some point, but I've been hearing a lot about that. I'm going to go ahead and pop up your charts. Let me know what we've been watching today and so far this year.
Absolutely. So first one today, I did a credit spread on DocuSign today. Did not work out well for me.
Okay, well, I like the honesty.
Yeah, it is what, listen, it's part of the game, right? We had good news come out on the company on pre-market. We were up. It went against me. It cost me about 80 cents. I mean, it's nothing horrible. We don't make a killing on credit spreads. We just make a high rate of return, not a high premium on it. So a couple of contracts, 80 cents. If you have one contract that's $80, 10 contracts is $800. It's not the worst thing that can happen, right? Amazon was another one on our list today, right? They had some news out on them today, but the news seemed good with their layoffs, right? But we were looking at a credit spread if it made it above. It did not. So we decided to go with a put option on Amazon. And if I take us over to my intraday charts, you can see where we opened up intraday. This is my Fibonacci level up here. We gapped up and then failed right off it almost immediately. If we go to a 1-minute chart, let's see, where are we?
Looks like we are getting a tiny little bounce here on the SPY on like the 2-minute chart. We'll see if we can hold anything, because it seems like today has been a pretty bearish overall day.
Use the bounce today as an opportunity to find resistance, and as it rolls over, play the downside again. That's what we want to look for on a day like today. Just numbers were not good today for the economy. So, yeah, so on the 1-minute chart, we had this gap up and this fail, and right as we broke down here is where we were in on Amazon. Let's see, we did the 86 puts. We got about 50 cents in total for that when we closed that trade out. But you know, low price stock. I mean, we're not talking about an expensive option here. A couple of bucks, $2 to buy the option. You can do one contract for $200. 10 contracts is $2,000. It's not a lot of cash in just a handful of contracts there. So this one worked out well for us. It's not our best one today, but it worked out well.
That's what I like to hear. Sorry, go ahead.
No, it's okay. What were you going to say?
I was just going to ask if you had done any spreads or looking at the, just in terms of like the index, SPY or Qs or anything like that.
So I looked at SPY right out of the gate, which I always do for for a spread and or a pivot trade. I found nothing there. That gap down was too much, and the gap near this dotted line, which is a midpoint, Aaron, on our pivots, really wasn't excited. When we broke down and retested, I just wasn't comfortable on the trade, and I passed. I was afraid we were going to get a bounce back up above this S1 line, and we did not. We failed perfectly in there, and we moved from that 381 rather level down to about 379.5, and I missed the entire trade. And after that, I was done. I wasn't looking to play any of these bounces, and this was getting a little bit late for me to want to take a pivot trade. So and you can see it's just kind of, it's just redlined, right? Nothing happening in there. I mean, just for me to want to take any to the upside right now, I would want it to get above that midpoint, that 1.5, which is about 380.25. But we're at lunchtime. I tend not to open positions at lunchtime. They just don't seem to work as well for me, for my style of trading. It's too flat, too drifty, right? So, but I didn't take anything on SPY today, but I do look at it every day. I am long SPY. I'm long Qs. I look at covered calls, every week on them to rent that stock out, especially on days like today when the market's going down and you can pick up, covered call. For those that don't know, you're renting out your stock basically. So I look at weekly options here. Actually, let's bring an option chain up and take a look at that. So let's see if it caught it there. All right, good. It got it right there. So if we look right now, I normally, when I write covered calls as a normal covered call, this is retirement money for me. That's long-term holdings. But normally I'm looking at about a 40 delta. So we'd be looking at selling the 382s. For me, if I were doing it right now, I'm looking at a delta more of that 10 to 15. So I can sell, give someone the right to buy. Oh, I got the wrong day. I want today. I can give someone the right to buy. Let's see, we've got a 16 delta. So this SPY away from me at 383, which is trading basically at $3 and change above where it is now. And they're going to pay me 16 cents, 15 cents for that right. I take on an obligation. They take on a right. It may not seem like much, but do this every week. Actually, you could do this now, every day, right? 5th, 6th, they'll write. Then we get 9, 10, 11, 12, 13, right? Into next week. 14 is Saturday. Yep. So, every day we can write them out. So I love covered calls. And of course, Aaron, we would do them earlier. If you were doing tomorrow's, as I showed, you could pick up 50 cents for tomorrow at the 387s. And you have a 14% chance that they're going to take that stock away from you, basically. So for SPY, Qs, I look at these every day as potential setups. But
when you say you're long those names, do you mean just in terms of in your long-term investing account, not through options?
Correct. So long-term, where I own the equity itself, and the SPY and the Qs versus owning mutual funds. See, what happens with mutual funds? Now, when you buy the fund, you have massive fees inside of it, whether you realize it or not. Go and look at all the hidden fees that are inside of there, the turnover ratios and all those different things. I don't own and haven't for over 25 years, 20 years at least, owned any mutual funds for myself, my family, whose accounts I manage. We don't own any mutual funds. We make our own. We buy the SPY, we buy the Qs, we buy quality stocks. But then we rent those stocks out. But when you take the SPY, Aaron, if I buy the SPY and let's say it's trading at, to make an easy number, it's $300, right? I'm going to take that SPY and I'm going to go 1 year out and I'm going to sell a covered call a year from now. So the stock gets all the way up here. They can take it away from me all the way up here and they're paying me a huge premium for it. And then on top of that, I'm going to take that premium and I'm going to buy a protective put. It's called a collar. You're putting a collar around the trade. And by doing that, if the stock drops, right, I don't care how far down it goes. It's not meant to be where like a kid broke the antenna off your car. That's not why you bought insurance. This is, you had an accident. This year we had an accident, right? 20%, 20+% to the downside, right? So to offset that, as the market's going down, the value of my put is increasing. Okay. So if I've got a stock price that dropped, but an option price that I own that's increased drastically, it's not a 1-for-1. But instead of losing 40 and 50%, you might lose 10, 12, 15, maybe 20%, maybe on the outskirts of it, right? And if you plan it and manipulate it properly, you can actually make money in that market as well.
Yeah, I love that car insurance analogy because like you said, you're not buying those, puts just in case the market goes down a little bit. You're buying those puts in case there's a market crash, correct? In case there's like a COVID 2020 type crash where the market, really comes down quickly.
It's exactly it. And the way to think about it is, because when I would teach this, you always get the person that says, but Rob, what happens if the whole year goes by and it never crashed? I wasted that money on the insurance policy. And I said, you know what? You're right. But think about this. Your car insurance is due tomorrow. Do you sit there and say, I didn't have an accident, so let's go have one today? You paid
right.
for
You're
it.
happy with not having an accident, regardless of if you paid for the insurance or not.
Right. This is just, it's protection. It's peace of mind. It is what allows me to sleep at night. I can set it up, walk away from it. If it goes up a lot and they take it away from me, okay, great. I mean, I got all this extra premium as profit in there. If it goes down, I've got protection that will increase. Again, not a little bit. It's not helping me for that. It's this year. It's what happened this year that we're doing that.
I love that. All right, Rob, do you want to go back to some individual names that you're watching right now? I'll see if we've got any stocks flying from the chat that we can check out. Evandro says, greetings from Brazil. Evandro, greetings from Detroit. Glad to have you joining us from Brazil. Jay Rice looking at STZ. That might be, I think that's Constellation Brands. Beer and wine ain't even safe in this market. That must be getting crushed today too, like everything else. What do you got pulled up, Rob?
So I'm going to pull STZ up.
Okay.
Constellation. So we got crushed today. We're down $21 today on Constellation, food, beverage, distillers, right? You could see if we look, Diego, MGPI, and WVVI, I think it is. Williams Valley Vineyards are in the same subsector if you guys are looking for others from a sympathy play. So we have had a 100% pullback, Aaron. If we look, this is our fib right here, right? Great fib, and was doing well until today, right? We have moved 100% back. I don't have a place to redraw new Fibonacci yet because I don't have another bounce taking place yet. Once I get a bounce, we can consider another draw, but we don't have it at this point. All right. So what we're looking at is we're going to look at previous fib levels, which take us down to about 204.5. So that's where our next support is. If we break where we are now, we're looking at about 204.5 to the downside. But I would be very cautious on trying to take anything on this. Even tomorrow, we'll settle out after today, and tomorrow, in many cases, we'll get a bounce. Maybe small, but we'll get a bounce just because it was an overreaction on how we played it out today with as much of a hit as they took. So intraday, if you can break the 209.70, so break, retest it, and fail, there's an opportunity with that 205 level-ish level, 204.5, I think it was, as a potential support. But I think there might be some other companies, if we missed this one already, there might be some other ones that are better off.
Got it. So in terms of like overall market, Rob, I know you kind of separate your investment accounts and your options accounts. When do you think we can expect just to see some more like sustained bullish activity? I know we get some of these kind of crazy bear market rallies, and you might have some rallies here and there, but when can we start seeing some like weeks that we're stringing together, positive weeks on the S&P or the Dow?
First thing when we look at S&P, Aaron, is look at the moving averages. I have 3 moving averages there: brown, green, and pink. The pink is the 8, the green is the 21, the brown is the 55. All Fibonacci levels, all 3 of them are exponential. Right? We are in what's called a bearish bias right now, which means we are purely in a bear market at this point. Not in reference of we've got a 20% down, none of that. This is a relationship of price to indicator. We're in an overall bearish pattern. When we look at a slightly bigger picture, Aaron, right? We go out here and we look at the S&P. I know it's a little scrunched, but try to stick with me, guys. This overall pattern is down big time. We're putting in lower highs and lower lows. Until this cycle changes, Aaron, I am not ready for the market to be bullish. That doesn't mean you can't find some buying opportunities, right? But remember something, there's 2 different ways traders go at this, or maybe even 3, but they're the person that's trying to get in and be like the first one, you buy at the lowest low, you could just brag to all of your friends, and that's awesome. I usually get slapped every time I try to do that because we get another leg or 2 to the downside, at least for me anyway, when I seem like I try to do that. You can wait for the market to show some bullish signals. We had it here. We popped up above that upper resistance level. We closed above. We stayed there for a day, 2 days, and then it was gone from there. This false hope gap and fail, right? And we've not been able to recover from that. So until I can get my moving averages completely flipped around where the 8 is on top, the pink, the green's in the middle, the 21, and the brown's on the bottom, the 55, until that happens, I am not ready to even consider anything. And then on top of that, I need to close for at least a couple of days, Aaron, above this downtrend line that's here.
Yeah, sorry, I'm just going to go full screen on this for a second so we can get those levels blown up.
Yeah, absolutely. Absolutely. And I can
keep going.
So until we can get above that downtrend level there, I am not interested at all in anything bullish for the longer term. Right, which means when I'm ready to add to my SPY and my Qs positions, that has to happen first for me to go and do that.
Got it. Yeah, I think that makes a lot of sense. And I don't know, it's interesting hearing it from different, perspectives, because some people will tell you, like you're saying, you want to see this on the chart. Other people will say from a more, fundamental catalyst, they're waiting until the Fed starts cutting, all these different things. I think, like you're saying, a lot of times that the charts will give you these clues before whatever that real fundamental, because people always say, like, the market's moving 6 months ahead of whatever is happening in real time.
Absolutely. There are 3 things that move the market, right? There are the technicals, the fundamentals, and the news. Those 3 are what moves the market, okay? But if we talk about it or look at it for a second, think of going to a doctor's office. You walk in the doctor's office and you say, "Doc, how am I doing?" Doctor looks at you, says, "Well, your head's facing forward, 2 arms, 2 legs. You look like you're okay. Fundamentally, you look fine. Technically, we're going to run some tests. We'll do some blood work and we'll take an EKG. We're going to do some tests." They run the test and he comes back and goes, "Yeah, you're in good health." And then you walk outside, wham, you get hit by a bus. That's news. Didn't matter how good of a shape you were in, right? Each of those 3 items move the market, right? When the fundamentals move it and we get a new announcement of earnings, that earnings on a company really good, really bad, it's built into the chart. And it will last for 3 months until the next earnings cycle comes out, or the next news cycle where things change that pattern. So I follow the technicals. I don't, outside of looking at earnings to know when they are, I don't look at any fundamentals at all. I mean, Apple is a fundamentally sound company as far as I'm concerned. I mean, they're one of the largest companies in the world, right? So Berkshire Hathaway, how do you fight with what he's done? Berkshire, I'm still profitable on my Berkshire Hathaway investments, right? The guy does a phenomenal job. That's my fundamental analysis. I don't look at PE ratios and book values and breakup. I don't care about any of that. That doesn't mean it doesn't work. It's just not for me as a trader.
Yeah, and I think everyone just has to kind of, try to find for them what works. Are you going to be a more, fundamental guy? Are you going to be a more technical guy or girl? Or do you want to, try to figure out how to do a blend of both and try to see? But I still think, like you're saying, Rob, like you're looking at the charts, those will give you the clues oftentimes beforehand. So I always like to, I'm more technical for my trades and then more of, I would say, fundamental for my like long-term, if I'm buying Apple to hold for the next 20 years, I don't care what the chart really necessarily looks like. I want to know, is the underlying company sound? Is it going to keep growing? All those things.
Right. Like I'm still buying Tesla. I think Tesla is a great company. I think Elon Musk, it's kind of a just bet on Elon. Don't just bet on him. Right. I like Tesla. I own quite a bit of it. Every time I go to my cardiologist appointment, we talk more about Tesla, the doctor and I, than we do about why I'm there, right, for my annual checkup. But, and that's a company that I think long term. I mean, you saw Kathy Woods the other day. This is her second time now coming out in the last 2 or 3 weeks that she's bought big amounts of Tesla to add to the portfolio.
Yep. She is still adding, not scared to add more Tesla there. All right, Rob. Well, let's see if we've got any stocks or questions flying from the chat. But if not, I'll go ahead. I'll go ahead and let you go today. I mean, it's always a pleasure to have you on. Always a pleasure to get you on every Thursday. I'll go ahead and share that link in the chat. Trading with, or Trading Like a Boss. TradingLikeABoss.com. Trade with Rob.
Yep. Listen, don't bring me on after guests like you just had on there. That's a tough act to follow, man.
Oh, after Arya? I know. She's cute, isn't she?
She was amazing. And, the funny thing is I used to do it with my own kids. When they were
You did? You would bring your...
Not bring them on the show, but what stores her and her friends were shopping in.
Oh, yeah. Well, I used to do that too. I mean, I would come home and like whatever I was asking for, my dad would be like, oh, maybe that's, maybe I should listen that's what they're buying right now,
Bingo. Absolutely. Yeah.
All right, Rob. Well, enjoy the rest of your Thursday. Happy New Year. We'll see you next week.
All right. You got it. Thanks, Aaron. Hey, say hi to Jason for me.
I will. All right, guys, that was Mr. Rob Roy. TradingLikeABoss.com. Link is in the chat. Check that out if you want to learn more from Rob. Again, Rob's like my go-to guy when it comes to option spreads, credit spreads, debit spreads, all those things. You guys know me. I'm just out here kind of YOLO buying options, this and that. That's not what Rob does. That's not Rob's style. Rob's out there hitting singles and just collecting that bread, which is something that I aspire to do. So... yeah. Alrighty, y'all. Let's go ahead and go back, check in the overall market, see how we're doing there. SPY still not doing anything. Still not doing much. We'll say that. Let's go ahead and pop that Benzinga Pro back up. Got the SPY on the 2-minute chart. And like I said, I wouldn't be surprised to see us just kind of hang out down in this range right here today. It doesn't look like really we're trying to break any which way direction or the either. A couple red candles in a row right there, so I'd be worried about us coming all the way back down to this level here, but we shall see. Looking at the volume looks a little dry today. Let's check. I mean, yeah, if you look, we've only got about 31 million shares traded, 84 million yesterday. I'd be surprised if we get the same amount of volume as we did yesterday today, maybe a little bit more volatility yesterday. So all right. Come on, SPY. Give us a bounce. Give us something. There you go. There you go. It's like I forgot how to move up. Don't forget how to move up, SPY. We need you. We need you, buddy. Alrighty, y'all. Quick rundown for the rest of the show and programming for the day. Money Mitch will be live with y'all in about 20 minutes. Stock market movers. Money Mitch, he's bringing on Jay Woods, the NYSE executive floor governor and chief market strategist at Drivewell. Jay Woods, always a great interview, so I'll be tuning in, watching that with my man, Money Mitch. Again, unfortunately, Mr. Market Not loving 2023 so far. We thought he might the first couple days of the year, but he's saying, hey, maybe not. Maybe we're not. Oh, boy. SPY coming all the way down now. Come on, baby. If it gets down to 379, I will take an intraday long just for a bounce. Not that I think we're going to have sustained bullish activity throughout the afternoon, like a rally into the close, but I would try to play, a little bounce if we get back down to 379. I just would be surprised if we start making new lows today at this point. But hey, crazier things have happened. I wouldn't be surprised to see some fireworks toward the close today, whether that mean a rally or whether that mean a big sell-off. I would not be surprised to see something like that coming. Catching up on the chat, the Tesla CFO bought shares about options at year-end. Yeah, I don't really know. Fed speaks today, Bullard. Yeah, that usually... What time is that at? What time does Bullard speak at? I might buy some puts before that. He's usually pretty bearish, huh? Let me pull up on our economic calendar from Benzinga. Let's see if we got Bullard speaking. It is Thursday, January 5th. St. Louis President James Bullard speaks in about 15 minutes. Wow. All right, that's not good for... All right. Are we going to get... No, I don't know. I mean, I would assume he's like the most hawkish one. But that might mean that if he says anything that could be possibly construed as somewhat dovish, the market could run on that. I don't know. Sorry, guys. I'm managing some trades right now. Managing my trades. I might buy some puts before Bullard speaks, honestly. I'm bullish SPY, just not bullish Bullard. Do you think there'll be a big move? Yeah, the non-farm payrolls, there'll be a big move. Yeah, Arden, and I think that's a big thing for people to realize is when you're looking at catalysts like this, like even Bullard speaking today, like you have to take into account how much the market's already down and how much of this like is already being taken into account. Like maybe we wait till after Bullard speaks, and if the market goes down some more, then you buy something, and okay, this is an overreaction. I don't know. Either way, it's still proving to be good news is bad news, good news is bad news. But even if tomorrow the payroll numbers are good, and that means the Fed can keep raising interest rates, how much would that really bring the market lower after we basically already had that move today? I'm not quite sure. It's going to fill in the rest of the wedge, that is all. Yeah, I mean, either way, this doesn't look super bullish to me. I mean, even if we touch back down here, it might not be that big of a move. Markets got actually absolutely crushed from last rate hike. Yeah. Alrighty, y'all. We're going to go ahead and wrap a few minutes early today. Money Mitch will be coming up next. This stream will redirect you automatically. You do not need to go anywhere. When we come back tomorrow, or actually we won't be back tomorrow. We have our quarterly meeting. We will be back on Monday. Monday. We'll be back live here, Benzinga HQ. Till then, stay green, stay happy, and everyone have a happy new year, I hope. Money Mitch will be coming up here in about 12 minutes. Do not go anywhere.